Hello, it's Robert Miner with Dynamic Traders Group with this week's brief DT trade strategies for the week beginning April 20th, 2020, where I go over a couple of specific markets that has specific trade setups coming up in the next few days. And as usual, if you want more details, check us out at dynamictraders.com or DT Reports, where, this past week I did a 20-minute general DT report video update, and then I did about a 25-minute specific trade strategies tutorial. Got really specific about what's coming up in a few markets this next week. But we'll take a brief look at them, enough for you to be aware and be prepared and to develop some specific trade strategies. Before I begin, I really hope that you have all downloaded my big picture stock index report on the last 120 years of bear markets history, so you can understand what's going on in the market today. If you haven't, here's the link. I'll put the link in the description below. And please pass this report around to everybody. You don't have to put an email in, you don't have to put nothing in to get access to the video and the printed report. And as always, the trade strategies that I teach you, based on reality. I actually trade pretty successfully too. So listen up. Let's check out a couple markets. We're going to start with my favorite. Here's the weekly data for the ES. As of the end of this week, we've come right up to the 100% alternate price projection of the wave A from the wave B low, just below the 62% retracement, and significantly, the 8 weekly momentum reached overbought. We just put this together, and that's enough for you to be alert for a potential significant high in the days to come. Here's the daily data, and I'm breaking this down into a potential Elliott wave, A and a B, 1, 2, 3, 4, and Friday, the new high making a wave 5. It's almost textbook setup. If you listened to my brief video a week or so ago, I was anticipating around the 13th or 14th, that would have been probably Monday or Tuesday, we were going to make that high, and all we did was get sideways for a couple of days, and then we popped up higher. And we never got that trade elected, but we got a specific trade strategy here for you early next week. Probable 5-wave advance. Here we are in the intraday data. I won't go into the details, but above the market is the ideal target zone to complete that advance at 2902 up to 2925. Those are the external retracements of wave 4 of 5 and wave in the higher time frame 4 of 5. Very significant, and if the market doesn't continue up to 2902 early next week and first trades below 2806, that means the advance from the April 2nd low at least is complete, and we're going to have several days sideways to down. Good tradable opportunity, whichever happens early next week on the short side. But just one suggestion, if we get higher, we make it around 2902 or so early in the week, then you have to develop a specific trade strategy for entry. What you want to do is recognize that we're in a position, an ideal position, to have completed that advance from the April 2nd high and a wave 5 of C high. Then you develop the strategy if we get to that area. And the alternative is, if we don't get to that area, we trade below 2806, then that top should have been complete, and then you do an immediate strategy to be short for at least several days. More than likely, once that's triggered, we'd be sideways to down for several days, and it has the potential for several weeks. Well, here's one more setup, and it'll be in textbooks in the years to come, I think, and that's Crude. Crude, this is the continuous daily data, That means rolling over in the futures contract when the volume rolls over. Right now, the most active contract is the June contract. The May is still reasonably active, but it's rolling over quickly into the June contract. So the nearby contract on the continuous data will be in the May, which made a new low at the end of last week. The June did not. But here's what we want to look at. Boy, this is textbook for you people familiar with Elliott wave, 1, 2, 3, 4, ABC for the 4, wave 5, we've come down, we've almost reached the ideal end of wave 5 target zone, price target zone at 1683. And we've got some time factors. These are just a couple of them. I'll just give you the bottom line is this low should be complete no later than Wednesday. Daily momentum's dual look back oversold. This is a probable setup by the middle of this coming week that will complete the decline from the January 20th high, and that's been, I think, something like a 70-75% decline in price from, up from 65, we're down to under $19. Good grief. So this opportunity is very significant next week to complete a low in crude, and trading above 2089 will signal that the low is complete, or making a bull reversal in our daily DT oscillator with a higher close. Will signal, that'll be the initial signal that it's complete. And the initial setup for a specific trade, whether you're doing futures, options, or ETFs. Well, those are a couple setups for you early next week. Potential setups, at least, things for you to look for. And if you want to be alert to other trade opportunities, check out our DT reports, where we look at all the major markets, including the euro and the dollar, notes, bonds, and of course, gold, silver, and the GDX, and more. That's it for today. Robert Miner over and out for now.